Okay, so you've definitely seen them on the side of the highway, right? Those tow trucks with the flashing lights. But I guarantee there's a story behind them you have never heard. We're talking about a world of burning trucks, organized crime, and these really complex financial scams. But believe it or not, the rabbit hole goes way deeper, connecting the actual asphalt of the street to the super abstract world of artificial intelligence. Let's peel back the layers on this. It all kicks off with this simple question somebody posted on Reddit. We see these news stories all the time, right? Tow trucks being set on fire, drivers being targeted in shootings, and you have to wonder why. I mean, what could possibly be worth that kind of violence in the towing industry? Well, as it turns out, a whole lot. So before we can even get to the why all this is happening, we really have to understand the what. And what's happening on our roads? Well, it's nothing short of a war. I mean, you can forget simple business competition. This is a violent, pretty much unregulated battle for some seriously lucrative territory. At its very core, all this chaos really just boils down to a turf war. You've got these drivers, sometimes called chasers, and they literally race to accident scenes. See, being the first one there means you get the job, and that job is worth a ton of money. And in an industry with almost no regulation and some pretty clear ties to organized crime, that competition has just exploded into arson and violence as these rival groups fight for control. Okay, so what makes a single tow valuable enough to actually fight over? Well, the answer, like it usually is money. But we're not just talking about the fee for the tow itself. No, no. The real prize is the intricate and totally illegal scam that comes right after. So here's how the scam usually plays out in 4 basic steps. First, a bunch of trucks will just swarm an accident scene. One of the drivers will pressure the victim, who's probably in shock, to use their body shop. For that little referral, the driver gets a cash kickback on the spot. We're talking $400 or more. Then the shop takes over, jacking up the repair bills and charging these insane storage fees, and they send that massive inflated bill straight to the insurance company. This warning from a Reddit user just cuts right to the heart of the problem, doesn't it? The advice you hear from anyone who knows the industry is always the same. Call your own insurance, call your own roadside assistance. Because the tow truck that just shows up out of nowhere, yeah, it's almost never there to actually help you. All right, now let's zoom out for a second. This chaos on the street, it doesn't go unnoticed. The insurance and finance industries, they have their own way of looking at all this. They're not seeing turf wars, they see patterns. And they have a very specific label for the companies involved in this stuff. And that label is high-risk operation. That's the official term for any business that, because of its history and how it operates, is just way more likely to rack up expensive insurance claims. It's basically the system's formal way of saying, yeah, this business is a hazard. So, what kind of stuff triggers that high-risk label? Well, a high number of insurance claims is a huge red flag. Same with high driver turnover, bad safety scores, or even just being a brand new company. You see, all that chaos from the street, it translates directly into these numbers, these risk factors that insurers are tracking. But we can zoom out even further than that. Because beyond the insurance companies, there's another set of eyes watching all of this. The lenders, the people who give out the loans for the trucks. And they are using some incredibly sophisticated tools to see trouble coming from miles away, sometimes before it even happens. Lenders basically use 2 kinds of predictive models. First, there's the application model, which just scans for lies on the initial loan paperwork. But the real game changer is what's called the behavioral model. This thing watches your financial moves after you get the loan, constantly analyzing your history to predict if, and more importantly, when, you're going to default. Just think of it like this. The AI is basically a financial detective. It doesn't just look at one moment in time. No, it reads the entire story of a borrower's financial life. It analyzes the sequence of events over months or even years, forwards and backwards, to find these subtle patterns that just scream, this person is going to default. And here's a little peek at the AI's blueprint. I know it looks incredibly complex, because it is. But really, all you need to know is that this system is built to do one thing really, really well. Understand the story your financial data tells over time. It finds meaning in the sequence of your payments, not just the individual numbers. So what kind of clues is this AI looking for? Well, one of the biggest red flags is how the part of your loan that's actually gathering interest changes from month to month. It's a really subtle detail, but the AI has learned that specific kinds of jumps or dips in this number are a powerful sign that a borrower is in financial trouble and probably heading for default.
And it's not just about interest. The AI also digs into the changes in the total loan balance. It's looking for a specific kind of financial signature, a pattern of changes that signals a borrower is really struggling, long before they ever actually miss a payment.
So let's bring this all back together. We started with burning trucks on a highway, and somehow we ended up inside a complex AI model. How on earth do these two worlds, the asphalt and the algorithm, actually connect? The connection is actually pretty simple and pretty profound. Every act of violence, every single fraudulent claim, every desperate financial move made by one of these tow truck operators, it all sends ripples through the system. And in our world, those ripples are all captured as data points. This is the entire feedback loop, right here. In action, the turf war on the street leads to insurance claims. Those claims get an operator flagged as high risk. That high-risk behavior eventually messes with their finances, causing mispayments or strange balance changes. And finally, the lender's AI spots those exact patterns and predicts that the loan is going to fail. From the street, to the system, to the prediction. Which, of course, leaves us with one last big question. What we have here is this escalating battle between increasingly risky behavior on one side and increasingly powerful predictive technology on the other. So as these algorithms get better and better at spotting trouble, does it actually put an end to the scams? Or does it just create a kind of arms race, forcing the players to invent even more sophisticated ways to try and beat the system?